Hi guys, welcome back. So it was roughly 2 weeks ago I posted a video and talked about the sector in 2021 in which I thought that the heated sector might have moved out of the previous ones like in 2020 and more into the other sectors that were not as hot last year, while the smart agriculture, blockchain technology, and chip sector were what I have been talking about quite a bit in my channel this year already, and I just added the sector of logistics. And since I haven't really gotten so many questions regarding to this sector, so I want to elaborate more on this, especially the movement I'm seeing. It looks like we might have been just starting the move. So why the logistics sector now? This had been a heated sector a few years ago when the e-commerce business were rising pretty fast, especially in China in the last decade. And it has gotten to be more a competitive sector because of how saturated e-commerce was getting. So then a lot of money started to move out of the logistics sector a few years ago, and it had been cooling off for a long time because investors simply did not see more exponential growth from there because of how saturated it was getting. So why visit that again? It's because I think there are a few turning points coming up for the logistics sector. One, even though the China market had been so saturated for logistics, so mature already, there is still growth potential. Even though e-commerce was quite developed in the first and second tier city, there are still a lot of regions in China that are not covered by well-developed logistic infrastructure. So a lot of the logistic companies, e-commerce sites are all looking at these third and fourth tier city countryside for the next growth opportunity there. For example, Pinduoduo, JD, and now Alibaba. At first it was PDD that started from the third and fourth tier cities strategy and grew quite fast and took away a lot of the market share from Alibaba, and then it started to take these giants' attention to focus more on the third and fourth tier city. And this year, a lot of the focus from the government has been on development of the lower tier city, the more poor regions. So definitely the third and fourth tier city strategy. For the next potential growth within China, another one catalyst is the purchasing behavior change with the COVID. And here it is specifically or especially the fresh goods or grocery sector, where a lot of brands wanted to get for a long time but couldn't crack it down because of the difficulties of fresh logistics, the problem, the speed it requires, and also the cost of the last mile delivery in a fast delivery requirement. Because when Chinese people buy grocery online, they expect to get it within 1 hour. Time is the biggest problem. Chinese people buy grocery every day. They are used to getting something fresh every day instead of buying once a week like the West. This is why the fresh and grocery e-commerce have been very difficult for the last decade, and the COVID had completely changed it. The technology was getting more ready about 2 years ago. A lot of internet platforms were starting to test it out in numbers of cities. Like me, myself, before COVID, I was starting to buy grocery online every day and it get fresh delivery within an hour, and it was very convenient already. But what happened with the COVID was that when 1.4 billion people were locked down and could only stay at home, this is when it completely changed the behavior. It was just a very good catalyst coming up at the very good timing when the technology were getting ready. So now, within this 2 years, the fresh and grocery had been very different. This is why PDD, JD, and Baba were all coming onto this sector. There were a lot of new platforms coming up for community group purchasing. Group purchasing is like you can buy it with your friends and get a bigger discount and deliver it fast and fresh. So this is becoming quite interesting. When the purchasing behavior change, the logistic infrastructure would need to change, and this is where the logistic companies can have the chance for more growth again. So this is the growth within China. Then you have the out of China market. And here I would specify it to be South Asia market, because this is where a lot of the Chinese e-commerce is expanding more than Europe and North America. A few years before, China was the most mature market for e-commerce and logistics. That's why a lot of the companies were growing there and mainly focusing on their market in China. But again, what happened with the COVID was that it really speeded up the changes, the transition for the consumers worldwide, and therefore the market is getting more ready for the lot of the Chinese e-commerce giant to expand into, building up more platforms, building up more teams, offices, and more importantly, logistic infrastructure. And also it happens that because of the US-China trade war and the sanctions of Chinese goods, a lot of the manufacturers were having excessive manufacturing capacity. That's why the government really encourages Chinese consumers to endorse the national brands. And other than consuming within the country, the government also encouraged the brands to do more export. Before they were exporting manufactured goods, and now they're exporting brands, and that's what the government wants. And for that, logistic infrastructure at the international market is a must, a prerequisite. And the last catalyst I have for logistic would be the new technology to hopefully revolutionize this whole sector, such as the blockchain technology, artificial intelligence, and robotic, etc. Last time I shared what the JD.com's founder said about this, how the e-commerce or online shopping would be completely different in 5 to 10 years, and I think this new technology would be a great catalyst, the game changer of the logistics sector. And this sector would be huge, would be more and more influential for people's everyday life in the future because of these new techs. So this is why I think the logistics sector is getting more and more interesting in a short term, medium term, and a long term. We have the potential, we have the catalyst, and we have the new tech to support it, and we have the government strategy to align. When so many things are coming together, this is usually where you would have some disruptor of the mature industry that might grow more from being small player. Now we can look at more stocks in this sector. While there are mostly logistic companies listed in China, mainland or Hong Kong, we do still have a few listed in the US. JD.com is famous for the logistic infrastructure. Is kind of their core of the business or strategy. They have JD Logistic separated listing in Hong Kong market. Ticker is 02618. It went public in May at the cost of $40, and after that it just kept on falling with the rest of the Chinese market. And then it seems like it had formed a double bottom. The double bottom could be confirmed last week on this day with the increase of volume, mostly the buying volume, last Monday. And after that, we have been seeing the steady climb for the recent few days. I think it would likely continue with this momentum. We are almost near the resistance around 36.9, and if the market has more pullback later, it might dip together and then continue breaking out eventually. We have another one which I introduced also back in June. It's the BEST, ticker symbol BEST. I have a small position on this, a little bit speculative play. So if you want a full analysis of the pros and cons, you can check out that video. It was posted back in June. Fundamental wise, BEST is having the leading position in the logistic infrastructure in international market like South Asia, because it was wise for them to start early, like back in 2015, when they realized the domestic market within China is just getting too mature, too competitive for logistic and e-commerce. So they started to turn in international market quite early, and right now it's paying off and becoming one of their biggest advantage and the fastest growth sector at their latest earning. And I think this would continue being like this for BEST. And chart-wise, it was having a great run-up back in June, but crashed down and make new low, driven by the DADA's Black Swan news, falling with the rest of Chinese stocks, and similar pattern, making a double bottom. Right now, it's recovering quite well. 1.37 was the biggest resistance, and we have broke through that, and now would be acting as a support. So anytime if it pulls back to support level, I think it would be good to buy. Resistance is around 2. The other one I want to introduce is DADA, ticker symbol DADA. It's the first time I introduce this. It is quite interesting as well. So the DADA group includes DADA, Kuaicong, and Jingdong Daojia. From the name, you can tell that it's one of the subsidiary of JD.com. Different from JD Logistic, it is more focused on the local on-demand retail and delivery. So local is the focus. It's a local on-demand delivery platform open to merchants and individual senders. So this is their website in China. The company's business is more like whatever products on most of the categories that anyone can need at any time. They can deliver it to you fast within the same city. So local delivery. So it is not competing with the JD Logistics, which also belongs to JD, but more like completing JD's main logistic business. The management has a good profile. CEO had worked in US at Oracle's McKinsey before returning to China, and CTO had worked in US as well at Square and Facebook, and before that Google, before returning to China. The company had released earnings a few days ago. Total revenue increased 11%, but if aligning with the revenue of DADA, now last mile delivery, it would have been an 81% increase year over year. GMV increase of 76%, and total number of active users were about 70% increase compared to last year. So DADA now had a decrease of revenue while JDDJ had a big increase of 81%. So together it balanced out to have 11% of growth. Different from best, to get into DADA would be more like getting into the new upcoming growth sector, which is the fresh and grocery, fresh delivery, last mile deliveries. Everything about fast and local, which is the next growing trend for logistics in China. The share price had a big dive after the earning, dropping as much as 11% on that day, but also quickly got bought back up, back above the 60 MA. So right now we have a few supports below. If we can have a pullback to be the level around 23 or 24, it would be a good price to start a position. And the next support is around 20.5. It would be good to add more if it does dip to there and set stop loss slightly below that support. That's it for today. I hope you find this information helpful, and if you have enjoyed this video, please give me a big like and write me a great comment, and I'll see you tomorrow. That's it guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.